Good morning, everyone, and thank you for joining us on Morning Markets from True Potential. Today, we'll look back at how the last week ended and then reflect on some of the data points that we'll be looking to over the course of the next 5 days. So just on Friday, we saw equity markets weaken a little bit. FTSE 100 down about 1%. Similar moves really across most of the major indices on Friday. And that for the week took most of the equity indices down about 1.5% to 2% over the course of the week. Combination really of factors weighing in sentiment, many of those that we discussed over the time last week, but just recapping some of those. An announcement from Pfizer that they would be temporarily slowing down the production of their vaccine as they look to improve manufacturing facilities. Secondly, political developments really in Europe. We touched on Italy and the challenges there, but also over the weekend in Germany we had the CDU party electing their new leader to take over from Angela Merkel later in the year. We also had further lockdown and restriction measures being discussed in a number of European countries. At the same time, albeit from a very low number, we're seeing rising numbers of COVID-19 cases in China as well. Also, just looking on Friday, we did have a number of data points from the US which further emphasised the differences between the consumer side of the economy and that which was happening in manufacturing, and we'll come on and discuss that in a little bit more detail. And then just on Friday as well, we had a number of US banks starting the fourth quarter and full year 2020 reporting season. And there we did see negative reactions in terms of share price terms, but to very strong results. So that's an interesting development and something to monitor over the coming results season as well. Just then focusing in on the economic data on Friday, it really did paint that mixed picture of the US economy. Consumer sentiment measured by the University of Michigan survey, that fell ever so slightly in the month, falling back to 79.2 from 80.7 last month. The main impact there was just a deterioration in sentiment caused by rising COVID-19 infection rates, and that was really influencing that sentiment reading. Alongside that, it wasn't really surprising, given what we've touched on in the unemployment backdrop, etc., to see retail sales decline as well for December, and they declined for the third consecutive month, falling 0.7% month on month. So that's something, again, that has been just building over the past couple of months, and it really does bring to the fore why some of the fiscal support packages being discussed by the Biden administration are important and why we need to see those come in the very near future. Also, it was worth just noting in the US, we saw a really strong industrial production number. So industrial production continued to improve, up another 1.6% month on month. And that just really illustrates that similar trend that we've seen across the globe, where services have been weak, but industrial activity and manufacturing activity has remained positive. I think just the other thing to touch on as well, just looking at some of the asset market moves on Friday, we saw the dollar continuing to strengthen, up 0.6% on Friday relative to that basket of currencies. So that's just, as we've always discussed in the past, a flow into the safe haven, a bit of protection as the risk appetite appears to be just weakened ever so slightly in asset markets at this point in time. And over the course of the day then, it wasn't really surprising to see sovereign bond yields come in, so the 10-year back at 1.08% from where it peaked out last week at 1.17%. So a material move over the course of the week as sentiment has changed. Just then, looking to the week ahead, a lot of activity numbers coming out and a lot of corporate information will come out as we really get into the fourth quarter reporting season. So that will really give us an insight into how management teams reacted in the fourth quarter to what they were seeing, but more importantly, how they're thinking about the evolution of their business into 2021. And that's important for a number of reasons. primarily where valuations are today, given the move that we've seen in equity markets over the course of 2020, but also how they're thinking about cost pressures or not within their businesses, allowing earnings growth to come through as we move through 2021. In Asia, we'll be focusing in on a lot of Chinese data. We've had quite a number of Chinese reports this morning, and just touching on a few of those, looking at fourth quarter GDP. Fourth quarter 2020 was plus 6.5% year on year, and that took us for the full year. The Chinese economy grew 2.3%, and in Chinese terms, growth of 2.3% isn't a lot, but relative to other developed and emerging economies for 2020, to report actual growth for the full year is quite an achievement, and something that we're not really expecting to see from other developed economies or emerging economies through the course of the fourth quarter reporting season. So we'll see how that evolves for other countries. We also saw retail sales, which was up 4.6% year on year, albeit below the 5% that was posted in November. Industrial production, again, much like we touched on in the US, remained very robust, up 7.3% year on year for December. So continuing to provide evidence of ongoing recovery, both in the domestic economy and internationally. I'll leave it there. Please do join us again over the course of the week, and do subscribe on our YouTube channel. Many thanks.
Subscribing to True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.